After the RBA meeting, we saw the Aussie rallying due to a small language change, as the market sees the removal of the scope line as a signal that they are finished. I have Sean Callow on the line, and he is a senior currency strategist at Westpac in Sydney. So Sean, do you think this is quite ironic, as a higher Aussie dollar makes a cut more likely?
Yes, it's all a bit circular, isn't it? We did, as you say, get that bounce on the Aussie after the RBA statement, which did surprise us a little bit that they didn't leave in that mild easing bias with the word scope to ease policy further. I don't really see what the downside would have been in leaving it in there, but as you say, it was a very neutral statement that was enough to see pricing for RBA easing has been cut back quite a bit. It was about one full rate cut was priced in a week ago. Now it's down to about half a cut by February next year. So that's obviously supported the Aussie. The GDP was actually, the details weren't great on it as far as we're concerned. It was a bit reliant on government spending and inventories. We have a very cautious consumer. Consumer spending is growing at the softest annual rate in 4 years. So for us, that didn't change our view. We still look for a rate cut in November, and as you say, if we get the further the Aussie pushes higher, then the more the RBA will be unhappy about it and will threaten another cut. So it definitely keeps a lid on the Aussie.
And Sean, we have the elections this weekend. Tony Abbott seems to be leading opinion polls. But who do you have your money on, and what will be the upsides and downsides, economically speaking, if Abbott becomes the next Prime Minister?
Yeah, certainly compared to New Zealand, I can see why New Zealand business would be more positive, in as much as they've got a source of domestic growth that isn't really prone to, not really vulnerable to global sentiment, which is the rebuilding after the earthquake. So that's a long-running boost to construction, demand for labour, and that's really, in an economy the size of New Zealand's, that's actually enough to keep the RBNZ on the sidelines, and they've effectively said that their rate cutting is over, and that their next move will be a rate hike, even if it could be some way into next year. So that helps the New Zealand story. In Australia, clearly there's a lot of concern over the reduction in mining investment as that big phase unwinds. It was a huge support for growth over a number of years, and now we're moving from the investment phase into the export, the pickup in export volumes, and that does leave a bit of a hole in growth. So the Australian economy can grow at trend growth is probably about 3.25%, and at the moment the underlying growth seems to be nearer 2.5%. So you can see why business is concerned about the outlook.
And Sean, let's have a look at business sentiment. According to Newport Consulting's latest State of Play report, Australian leaders are far more worried about their business prospects than their Kiwi peers. So do you think these concerns are justified, or do you think we will see a pickup in business confidence in 2014?
Well, I think the role of politics is probably overstated in most countries. It is in the US. I think what they attribute the role of the president, and similarly in Australia. But clearly it is a change of government. The coalition looks to be very likely to get back in for the first time since 2007. Their latest budget plans actually don't seem that different in terms of the net impact on the fiscal policy, which means that the RBA is not likely to alter its stance. It's probably quite relevant, I think, to equity markets, but given that the main factors driving the Aussie dollar are global factors, commodity prices, and so on, then I suspect there won't be a great impact on the Aussie.
Thank you very much, Sean, for that. Well, do join me later, as I will be covering the Bank of Japan rate decision. See you then.